Hello and welcome back to the Endeavors AI podcast. I'm Collin McKee, founder of Endeavors AI. We're an AI consultancy agency focused on building AI agents and workflows that buy back time for venture capitalist firms as well as others. So today I'm happy to welcome Michael O'Brien, the managing partner of Siol Venture Capital. They're currently working on closing their first $5 million fund. So it's very exciting. Michael, thank you very much for joining us.
Thank you for having me. It is very exciting. We're really excited. It's been a long time coming and it's almost done. So happy to be here.
Awesome. Awesome. And you've got a unique background. You're coming from lobbying and advocacy. So that's going to be a little bit of a different conversation than what we're used to here on the show. So I'm really excited about that. Let's start there. Walk us through your path from lobbying and advocacy into venture capital.
Sure. Michael O'Brien. I'm the managing partner of Shield Venture Capital, and yes, I am a lobbyist turned venture capitalist. I was a lobbyist for 25 or so years before launching Shield. The last 15 of that was as the founder and managing director of Mob Advocacy, primarily state and local government relations firm focused on startups and early stage tech. Um, we lobbied for startups, helping them with their legislative and regulatory issues. But what we kept hearing over and over from both our clients and people that wanted to work with us was, hey, you guys are really good at what you do, but we still need money. And oftentimes the next line out of their mouth was, without money, what you do doesn't matter. And so kind of looking at that and seeing how important the financial piece was for those founders, I was in a position to step away from the firm and go out and try to raise this proof of concept fund that really helps to manage that actual capital with political capital. And so we look for what we call regulation as alpha, which brings in my lobbying history and our venture partners history on the policy side, being able to see what's coming down the pike and being able to help founders weather those storms to really drive growth. So it's I think a very unique thesis and a thesis with a lot of strong value add for founders.
Perfect. And so that kind of gave you your focus as to highly regulated agencies or, sorry, businesses.
Yep.
Your focus is healthcare, energy, and transportation, some things that could be pretty scary to try to manage, but with that regulatory as alpha focus, that gives you guys even more fodder and more confidence to help
Yep.
those agencies.
We go a little broader than that: healthcare, energy, transportation, certainly some of that dual use, which is big right now, space, which is really big right now. The second group of our three investments included nuclear fusion and a healthcare AI company. So, we go from software and soft tech to hardware and deep tech.
Awesome. So how does that background actually change how you would evaluate companies? Is there a change? Does it change how you evaluate companies?
Absolutely. In some ways, being a lobbyist and having that policy background, I know what's coming down the pike. For instance, we're looking at a company that deals with social media and algorithms and the impacts on kids. Been looking at this company for almost a year now. As states were just starting to talk about this, started looking for companies in this space. And I think now with states like Utah and California and then the lawsuits coming, you're going to see a lot of states mandating this, and this company is in perfect position to take care of that. That's the kind of thing that we look at when we talk about regulation as alpha.
Okay. Yeah, that's very timely, super timely. So that's awesome. Do a lot of your founders actually underestimate how much regulation is going to impact their outcomes?
I think everybody underestimates how much regulation is in their outcomes. I think it's getting better. I think when I first started talking to founders, we had people in healthcare that really didn't understand healthcare, and you're getting less of that now. That understand not just the product and how it can help people, which is critical. It's important. If you can't do that, you've got nothing. But who's going to pay for it? How's that market work? do I need insurance codes? Do I need to be talking to insurance companies or providers and not just, direct consumers? And you're getting a lot less of that now. So I think that's good, but I think there's still a long way to go in terms of how much regulation is still out there and where startups are bumping heads against it.
So let's talk a little bit about what it takes to actually build a fund, if you could, because a lot of people have no earthly clue what that looks like. Can you walk us through kind of what that looks like on a day to day basis, not just the headline that you see on the local money magazine?
Sure. Yeah, absolutely. I will first say raising a fund is the hardest thing I've ever done. And I've launched businesses. I've, been my own entrepreneur. I've run consultancies. I've helped founders launch businesses. Launching this fund, certainly the hardest thing that I've ever done. Best job ever, though, I will say. And so it's got pluses and minuses. Walking through raising a fund, you talk to just like a founder does. You talk to all of your friends and family and you get some buy-in, and that gives for us, that got us our first million, that got us to first close. And then you're looking to build on that, looking for people who are, more traditional venture capital investors and fund of funds and institutional investors. And with that, we've gotten most of the way there. We're still a little shy. We're still raising a little bit, but, the messaging, the dialing for dollars, everything that a founder goes through, I go through as well. And so it's, um, you know, tack on just like a lot of founders do, kind of, what's going on with the economy, what's going on geopolitically, what's making people hesitant, what's what can speed time to close, all of those are factored in. Like last year was a terrible year for fundraising, until probably November, and that's carried in this year, although it's, I think with the crazy geopolitical climate, I think it's going to slow down a little bit for the next 3 months as well. We're still plugging, and just like we tell founders, if you don't give up, good things are going to happen. You're going to get there.
Yep. So, in your experience, like roughly how many conversations does it take on average to close one commitment? Are we talking to 20 people, 10 people, 5 people? What's been your
That's a great question. Early on, I was dealing with a lot of people who were new to venture. That was
Mhm.
probably, that was definitely higher than 10 to 1. Once we kind of did our first close, proved that we weren't crazy, had some returns, and had interest from those more traditional investors. Targeted correctly, if they hit our archetype investor, it was closer to 1 in 5. Getting those conversations was still hard. Once we landed the conversations, it was 1 in 5, but still kind of getting to those people and getting them to answer and finding the right warm introduction to get to those investors. That's a lot of hard work.
right? So initially you had to position Shield Venture Capital, as an industry leader, thought leader, a regulatory alpha. How did you go about positioning it? From someone that had never heard of your firm before.
Yeah, that's a great question. So our first target archetypes were lobbyists like myself and tech executives in regulated industries. So people who would understand how our value add could translate into success for a startup. And so that was, we had a lot of people understand it, but not understand exactly what we were doing on the venture side. They're not not venture investors, more the traditional market side. And so getting them to cross over was difficult, and an education, taking a lot of time to educate those investors on that side of it. It was important that they understood one side or another to me, because it's hard to convince people that didn't understand lobbying and didn't understand venture what it was. So, we tried to find people that understood one side of it and then did that education piece. And then once we found people who understood venture, which I think is the bigger leap, um, it's high risk, high reward. Once people understood venture, it was far easier to show them how my background could translate into helping them make money, making sure these investments were going to be good investments and had, that opportunity for a 10x return each time.
right? So not just reiterating your message, but kind of honing who your target would be because they're going to understand your message, right? Okay. Awesome. Yeah, I could see how that could take some work, but once you hunt it in, it gets a lot easier. Both your approach and your number of at bats hopefully comes down to get to where you need to be. That's all. Cool. Well, just a quick pause to our viewership. We hope you're enjoying this. If you're building a fund of your own, thinking about how AI actually works in it, not just tools, and actually the types of conversations to focus on, we encourage you to like, comment, subscribe. Any kind of feedback is welcome, and it really helps the audience here benefit more from it, and we can hone these discussions more into what people are interested in viewing. Help us, help you, sort of thing. So, all right, so let's shift into AI mode. What AI tools have you actually experimented with so far in your process?
All of them is my guess. I've used probably all of them at one time or another. I currently use Marbleism for a lot of my admin. To me, it was the best kind of email triage, and it came with social media and blog managers that helped me kind of reshape my message and gave me an easy way to be more consistent out there. So that's definitely been helpful. Use Perplexity, ChatGPT, Anthropic. Started building my own back office platform because I just hated the one that I was using. It was overly complicated for what I did needed. It was both overly complicated in places it didn't have to be, and it was too simple in other places that I needed more. And so I started building my own, and integrated our large language models into it, and and so it's now taking the place of the back office that we contracted with and paid for, but it's working better, and so it's all good. Everybody's gonna win
That's great.
in some way,
Mhm.
shape, or form.
Yeah, you actually went through the discipline of refining your own tools, which a lot of people get frustrated and don't. So, congratulations on that.
Yep, and
So,
used a lot of
what
AI
as far
coding for that, and I'm not a coder, but I could tell tell an AI coder what I wanted it to do, and you know refine it as it went through. It wasn't every once in a while we got a piece right in one take, but a lot of times something would come back, and we'd refine it and work on it, make it better. Now it's working very well. Actually, we just sent out our first Q1 investor reports on it, and really
awesome.
really impressed.
Yeah, it definitely takes time and patience. You kind of liken it to an employee that, they come in day one and you tell them to do something. If they do it perfectly, you should be amazed. And you shouldn't expect that to happen every time. Great. Yeah, good on you. So, what part of the LP outreach is still fully manual today? Is it research?
None of our LP outreach is fully manual anymore.
No.
Um, uh, we have scrapers because I've exhausted my network, and so we've got to move beyond our network, and so we've got scrapers pulling names. We've got bots kind of checking through my LinkedIn, figuring out, hey, here are the people that know them. We have bots that write that first draft email. I approve it, but I don't write it anymore. And it depending if it's simple, it will do its own follow up. So scheduling, if somebody says, hey, yeah, let's schedule a meeting, it can do that. If somebody says no, it can handle that. Anything in between, it flags up to me. So it's none of our LP outreach is manual anymore. And I don't think if you're an emerging manager doing your own LP outreach now, even when I started raising in the end of 2024 and early 2025, I wouldn't be able to do what I'm doing now. Uh, so it's moving leaps and bounds forwards very quickly. definitely
Awesome.
encourage everybody to take a look at and use tools that are available to you because it's not easy and it's easy to let things slip through the cracks.
So as you're scaling this fund, what actually has to change operationally, not just capital? Like what breaks first if the process stays manual?
That's a good question. So as we look from going to a $5 million fund to a $50 million fund, you're talking about 10xing everything, right? And so our LP outreach has to scale. We're working on what that looks like right now. I've got a few months before it has to scale, but we're working on it. Uh, the number of companies that we look at has to scale as well. Right now, we look at, I look at easily 200 pitches a month. That's great for a $5 million fund. It's not enough for a $50 million fund. Do I have to 10x that? No. Do I have to 3x it, 4x it? Probably yes. And where is that going to come from? What AI tools in terms of screening out? Is it better screeners? Is it finding better founders, doing more direct outreach than waiting for founders to come to us? Is it finding more partners that can feed that pipeline? I'm not sure yet, but we're looking at it and trying to figure that out.
So are you in that outreach, is that in a centralized tool or agent that you're using? Or are you kind of using like setting a
It's
couple and let them go off to the races and see who wins? Or what's your strategy there?
Yeah, so I mean it's all set in that same back office. I haven't pushed through anything for Fund 2 yet. Figure let's get through Fund 1. I'll then have a couple months before we in earnest really have to start work on Fund 2. And so we'll take that time and try a number of different things and see what works.
Smart. So here's the question that is always challenging to even ask, trying to look ahead, but just on the impacts of emerging venture capital firms over, let's not even call it the next few years. Let's call it through the end of this year. What do you see making the biggest impact, or what's going to change in people's strategy versus what they're doing today, in your opinion? If you could even look a few months from now.
Yeah, that's a great question. Couple things. One, on the manager side, I think the emergence of what people are calling big VC is going to drive investors to emerging managers. I think numbers show emerging managers, smaller funds have a better chance of returning money. You know, and being a top performer. Now it's riskier than an Andreessen or a Sequoia, sure. You've got to do the right due diligence there, but I think the number of emerging managers that are coming out and going out on their own is really going to help change the face of venture. And then on the startup side, used to be when we first started looking at companies, it was companies slapping AI onto whatever it was they're doing and getting funded. And that's no longer going to be the case. AI is no longer enough of a differentiator. In fact, it's making moats smaller and smaller and smaller every day. And so you've got to have great AI, but everything else has to be great as well. Otherwise, you're going to be left behind.
Right. So to piggyback on that, what do you think a lot of people are making a mistake with from AI? In addition to putting it all over everything that we've known, it's the conversation that everyone's having, and with little
Sure.
direction on. But
Yeah,
what mistakes?
I think on the investor side, I think AI valuations are still too high. I think it's a bubble that's going to pop, and I think it's going to pop sooner rather than later. So valuations are still too high, and I think again on both the founder side and the VC side, I think we're just starting to come to grips with how fast this is moving. You've got tools like, you had Bordy Boardman who started as a tool that was going to introduce founders and funders. He on his own went out and raised a fund, right? And so he's raised a fund, is deploying, and that would have been unthinkable maybe 8 months ago. I would have never thought that could have happened. and so we as venture capital investors have to take a look at that and make sure that we're doing as well or better than AI ourselves. And it's scary. I think you're going to see some shakeups, but I'm hoping emerging managers who are new to this and have that ability to be flexible and kind of pivot accordingly, are going to come out and do really well.
Yep. Yeah, do your diligence on all different ends, not just the regulatory, but also be diligent in learning AI and teaching AI. Don't be lazy. I guess that's that's one way of putting it. Technology makes us better, but it doesn't mean that we get to put our foot or take our foot off the gas. So that's excellent, Michael. I really appreciate you opening up about what's working and what's not. I really wish you the best in this fun. Hopefully, we can have you back on when you're closer to that $50 million target. So,
Happy
where can
to.
people follow you? Yeah, and hopefully sooner.
You can follow me on LinkedIn, Michael S. O'Brien, Twitter, signed underscore MOB or shield dash VC, I think, or underscore VC. I should know these things,
We'll put it down in the show
but we're
notes.
out there. You can find
Aw-
us.
Awesome, cool. And if anyone has questions on building more intelligent agents and workflows, that's what we do here at Endeavors AI. We welcome you to reach out. We've got a website, endeavorsai.com as well. So, Michael, until next time, thank you again for the discussion, and we'll talk to you soon.
Hey, my pleasure. Thank you.
Thanks.